Unfortunately, it looks like Ray Dalio's predictions are coming true. He previously wrote a wonderful book on big debt crisis in terms of understanding how they play out over time and how society goes through these actions to deal with these big debt crisis. What are sort of the policies you can do to deal with it? And sort of the long knives start coming out, and one of the first steps is always redistribution of wealth. And you're seeing this play out around the world because this isn't specific to one specific country. You're actually seeing a big debt crisis around the world. In China, for example, you've seen problems with their real estate and property sector. I did a previous video on Evergrande, and you've also seen their initiatives to do these sort of commonwealth, common prosperity initiatives to redistribute, share the pie among the most successful businesses to make sure you raise up, let's say, the lower tier cities, make sure they come online and participate in e-commerce. In the U.S., you're also facing a similar debt crisis. It's different in that very different sectors are involved, but it is involved with just huge numbers in terms of how much debt to GDP the U.S. has. And how we deal with it will also affect likely future returns for U.S. investors, and I'd argue the economy in general. And what concerns me here, and I'll talk more about Ray Dalio's initiatives and how he thinks of big debt crisis and how it sort of can play out towards the end of this video. So once again, I think that was probably one of the most important books I've read in the past decade in terms of thinking about how to handle and what happens with big debt crisis. But I try to keep this channel, like political agenda free. I'm not looking to say, hey, check this out, this party's right. For example, I did a previous video on Donald Trump's SPAC, and while I thought the company itself and the risk reward wasn't that attractive, there's no real commentary around his politics. And so this channel aims to be political. No, there's no political agenda, but I do have a mission, and this is, you're watching Unrivaled Investing. I do have a no hype mission focused basis where I'm trying to find exceptional companies, and I also really want to be grounded in rationality. So when I see something that strikes me as just really potentially fraught, something that has a lot of risks to the system, I want to call it out as saying, yeah, this just looks like a terrible idea, regardless of what your politics are. And so today, as folks are looking at exploring a wealth tax on the billionaires, I think it's extremely problematic and potentially could disrupt U.S. capitalism in the years ahead, significantly worsening the U.S. economy in the years ahead, based on effectively the rule of unintended consequences. So let's dive into what I mean and sort of what's going on if you haven't heard about it. Here's just a disclaimer, which you can read on your own time. And so recently, the U.S. government, under the leadership of Senate Finance Chair Ron Wyden, has been pushing for taxing unrealized capital gains. The intention would be to tax the huge gains of the wealthiest U.S. citizens, for now, i.e. billionaires. I mean, maybe in the future they might try to tax millionaires. Honestly, I'm disappointed that Janet Yellen, the Treasury Secretary and a representative of the President Biden's administration, is even considering this proposal and sort of saying, hey, if it gets passed, we wouldn't, reject it. Part of the reason why this proposal has even gotten some societal acceptance is because billionaires might not generate any taxable events by holding on to their long-term holdings. Okay, so you might say, well, wait a second. So if a billionaire holds a ton of stock, well, how are they going to pay for their living expenses? Don't they have to sell over time other than, getting a nice salary? I mean, most of their value, these billionaires, isn't from a salary. It's from, this huge equity pie, this huge ownership of a extremely wealthy business. Well, the approach generally is that if you're rich enough, why not just borrow against it, a policy known as buy, borrow, and die, where you never actually have to get paid a significant income because you're borrowing against the shares in which you own of a company, private or public. And, if you borrow against it and pay a small margin rate, yeah, it's a great deal, and you never actually have to generate taxable income. So that creates this perception of societal injustice. How come the billionaires are allowed to sort of do this? The problem is that by creating a rule to address this perceived injustice, I think it misses several big points. This idea of taxing billionaires for unrealized gains, saying, hey, this is what it's worth. We demand that you effectively liquidate some of your holdings and pay it out with effectively taxes. For one, the problem with this rule is it actually doesn't solve the problem. At most, what they think they can raise with this deal or with this proposal is several $100 billion. Now, yeah, that sounds like a lot of money, but relative to the national debt, National debt for the U.S. government is $29 trillion. So you're not talking about like a dramatic change. You know, the deficit this year is looking around several trillion, around 3 trillion. So once again, raising a couple hundred billion over several years, it's relatively small. And I'd argue the cost is potentially really, really high. For example, Tim Sweeney, who is the founder of Epic Games, Epic Games has the Unreal Engine, Fortnite, and a bunch of other, brands that a lot of folks around the world will recognize. He's called out this billionaire wealth tax provision, and yes, he's a billionaire on paper, effectively could force him to pay taxes on theoretical gains, effectively liquidating his holdings over time, handing control, this is his words, handing control to hedge funds and foreign investors that wouldn't have the same tax burden. So like that's one of the loophole problems with this is like, yeah, these hedge funds and foreign investors, they likely wouldn't have the same challenges. They wouldn't likely have the same forced selling initiative. And so it's the perfect way, once again in his words, the perfect way to deprive American companies of vision and leadership. I should put the end quote there. But I completely agree with this. Is what if you have these founder-led enterprises that effectively no longer control the business because they're forced to liquidate their stock over time? This just strikes me as extremely problematic. I mean, it's you don't want to take, extremely entrepreneurial spirits, the folks that create these billion-dollar businesses that have huge impacts around the world, and sort of say, oh yeah, we're going to be removing you from these businesses. And there's always the rule of unintended consequences. I mean, that's the challenge with this. You always have to ask, well, and then what? And what if a perverse outcome is that it actually leads more entrepreneurs to stay private, where it's much easier to manipulate the fair market value where it's astonishingly low? I personally can sort of vouch for that. I previously ran the finances of a private payments business, and I can tell you with certainty, when you are a private company potentially worth hundreds of millions or billions of dollars, it is very easy to manipulate what your stated fair market value is because you are a private business. It requires effectively paying someone else to say, hey, this is your stated market value, and it can be really, really low. Way below what another investor might be willing to pay, like 90% lower. Now imagine if Apple or Microsoft, and keep in mind, this is not like a secret to me. This is well known, for among private companies. Now imagine if Apple or Microsoft never went public to avoid this tax, because, a lot of these companies, a lot of these world-beating compounders haven't needed capital. It's not like they needed to be on the public market to get capital. Like these trillion-dollar companies, yeah, along the way, they could have gone private. They could have, like the founder, Bill Gates, Jeff Bezos, he could have said, screw this. I'm going to do a take private deal because I recognize this business is going to be worth so much more in the future. And I'm just going to do a take private offer and say, hey, you know what? This is going to be the value of this business going forward. Or maybe as a private business, I'm not even going to have to pay taxes on it. So you do have these really weird loopholes. You create even more bureaucracy. What I'd argue is the problem. And imagine if the U.S. indices, the U.S. stock market, self-selected for lower quality businesses, while the capital-light compounders, these mega success stories, these trillion-dollar success stories, opted to stay private. I mean, this would be the ultimate penalty in terms of making, I'd argue, inequality worse, by effectively saying, your options for investing, general public, have actually gotten significantly worse by doing this. I mean, it just strikes me as really risky to do this. Like the unintended consequences are potentially really, really high, and the impact is fairly insignificant with dealing with, I'd argue, a significant debt problem. And so the question is, do you want to potentially gunk up the machine that I'd argue drives significant value to the U.S. economy? It's one of the reasons why the U.S. economy is the largest in the world. So what is the solution for dealing with a big debt crisis? So first, I'm going to do a quick plug, where if you're interested in following along with my personal financial journey, go to unrivaledinvesting.com, where each month I call out potential multi-baggers as well as my own portfolio update. We also have an exclusive community dedicated to learning and trying to find exceptional companies on Discord, where I interact on an almost daily basis. So if you're interested, go to unrivaledinvesting.com, click join the journey. If you enjoy videos like this, usually I talk about potential multi-baggers, please make a point of hitting that subscribe button, hit that thumbs up button. So let's talk about what are the potential solutions for the big debt crisis. And so once again, Ray Dalio's book, North Star, that's how I think about it. I haven't read a better model in terms of thinking about this. And there's really only 4 things an overly indebted society can do. So you have a lot of debt, you're spending more than you're bringing in. So there's austerity. You cut spending, but that has big problems because, once again, if you cut, let's say, the $1 trillion that, the U.S. deficit, well, that $1 trillion deficit, that's someone else's income. That's someone else's job that they're getting paid to do. So all of a sudden, they're not getting that job. They have less money to spend on the economy. So austerity doesn't actually solve this problem because you still have this huge debt amount, but now you're actually collecting less in taxes from these folks that aren't going to be spending in the economy. Okay, so what's another possibility? You have redistribution. The challenge with that is you potentially gunk up the system, as we were talking about with this video. This video is all about redistributing the money from the billionaires to, let's say, the government to pay down this huge deficit. The problem is it doesn't make the pie any bigger. It doesn't really, once again, solve the problem that you have this huge deficit. It makes a small dent relative to addressing this monumental $29 trillion U.S. national debt. So then a third option, default. Now that has huge problems because, once again, one person's liability is another person's asset. So if the U.S. government were to default, yeah, that would be Great Depression squared. It would just be brutal because pretty much institutions around the world holding U.S. debt would then say, what? This is no longer worth 100 cents on the dollar. This is now worth 30 cents on the dollar. And then banks around the world, investors around the world would then be insolvent, and it creates its own domino effect where problems, then they start defaulting. It creates a whole default spiral. So none of those 3 actually really solve the problem. It's really just society's ways of dealing with it. And this is the whole reason why Ray Dalio wrote this book, was to, I'd argue, address that policymakers to start thinking about this, because you need to think about this in order to solving it, to solve this core problem. And the final solution is money printing, effectively printing it away where you have inflation and the debt becomes a much lower percentage of GDP. So if you have nominal GDP growing very quickly, but real GDP not growing that quickly, nominal meaning including inflation, real backing out inflation, well, nominal means that relative to the debt might be declining over time. Your debt to GDP declines significantly. So it's all about creating more money and inflating your way out of this. Now, this itself has significant problems, but arguably it is the only solution here relative to consequences, medicines, however you want to view it, that are much worse for the system, for the patient, however you want to look at it. The problem with, once again, with inflation is that it does create real ills and real problems. Think about all those savers sitting in cash and treasuries where they're just losing currently, not some sort of projected. They're currently losing. Treasury bond holders are currently losing the equivalent of 3% a year with inflation, at least. And so this creates real problems. And this is the reason why in Ray Dalio's book, he talks about the difference between, debts that are owned in your own currency versus countries where you have debts in other currencies. Because if the debt is in your own currency, then you could print away the problem. When it's not in your own currency, you can't do that, and then it's even tougher. So ultimately, the question, I believe, is we're going to, and this is why regardless of how much you think there's going to be tech innovation, you need to solve this debt crisis. And that's really the problem here. So that's the reason why I suspect you're going to have strong inflation potentially in the years ahead. So the question, I think that really needs to be asked, and once again, a lot of this is just sort of sharing the wisdom, in my opinion, that Ray Dalio has shared, which is that the question needs to be asked is, how do we make the pie bigger for everyone? How do we increase productivity? And that's really the main focus that I think would be better spent. Instead of trying to say, hey, how do we come up with a crazier bureaucratic approach to the IRS to tax billionaires, and they're going to find their own loopholes? Why don't we just make this simpler? Let's figure out how to make the pie bigger for everyone. And that's really the key crux of, I'd argue, solving this problem over time, recognizing we're probably going to be in for a period of significant inflation for years ahead in order to deal with it, because in all honesty, these other medicines for dealing, these other treatments for dealing with an overly indebted society is really problematic. And so if you enjoyed this video, talking about the big debt crisis, talking about this wealth tax and how problematic I think it could be, please make a point of hitting that subscribe button, hitting that thumbs up button. And thank you so much for watching.